I'm Roger Lasad and I love real estate. Hello and welcome to my channel. This is episode 13 where we will be discussing how to take advantage of the upcoming recession now. All right, guys. So let me share my screen here. So CNBC posted that the job market is still red hot despite recession fears as the great resignation continues. So not to get too crazy into this, this is a great article. I recommend you guys reading this because everyone's talking about the recession's coming, that there are indicators that the recession is on its way and that it may be severe, it may be deep, it may even go into a depression. Well, according to this article, there are 11.3 million job openings, and this is an extremely strong labor market. Now, in the past, usually recessions ran in tandem with a weak labor market and a lot of people being laid off, which is not the case right now. So what does this mean for you guys? Well, fear and actually greed are two of the strongest emotions that cause people to make the wrong moves when it comes to money decisions, specifically investings, more specifically buying and selling of real estate. So let's go back in time a little bit. Let's go back to 2020, where I think most of the people listening to this were paying attention to things that were going on. If you recall, first quarter of 2020, there was a Super Bowl. Kansas City Chiefs won after not winning a Super Bowl for quite some time. And then shortly thereafter, we went into lockdown. Why do I bring this up? Because I want to point out that from March to about June, I mean, I was on lockdown too, right? I spent a lot of time looking at the markets, researching what was going on. And by markets, I mainly mean the Fort Lauderdale, Miami market. And what I noticed is that there were definitely some deals, but those deals happened very early on. What do I mean by this? I saw deals mainly go down between, if I remember correctly, April to June, and then everything just stopped. Now, around that time was when people stopped returning my calls. People that I was working on deals basically ghosted me because everyone was afraid. No one knew what was going to happen, and there was this general fear that we were going to go into a crazy recession. So then it was very quiet for me up until, honestly, probably the winter. And then I started getting all these calls from people, and everyone was like, oh yeah, send me deals, and recession, and COVID's going to cause this massive crash in the real estate market, which, guys, we all know how it turned out, right? The exact opposite happened. And I think a lot of people searching and jumping in right now was mainly because of greed. But I also think that in the beginning, where people didn't know what was going to happen, and some major trades happened at the very, very beginning of the pandemic, signaled, or I should say, basically indicated when that was probably the best time to buy, because a lot of people felt that they might as well take the money and run versus waiting to see what would happen. And the reason I'm making this video is to let you guys know that, number one, no one can really predict if we will have a recession, how deep the recession will be, and how long it will last. I mean, let's just look over the last 20 years, guys. I mean, no one's really been able to do that with any type of reliability and frequency, right? So with that being said, since there's a lot of talk of recession, economic downturn, etc., what is a home buyer or investor to do? I recommend that you start looking for deals now, not when you think a recession or something is going to happen down the line. Because look, what if that doesn't happen? What if 6 months from now, instead of things going south, they go north? You would have wasted valuable time. And another reason I'm saying this to start looking right now is because what just happened. Interest rates just went up. The Fed is telegraphing or actually stating that interest rates are going to be going up at least twice in the next couple of meetings. I believe potentially one in this month and potentially another raise, I believe, in September or October. So with that information being out there, what does that mean? That means that for you guys that are lucky, aka luck is when preparation meets opportunity. In other words, those that you are prepared, you have your funds, you know what you're looking for, you've talked to your lender or your mortgage broker, you're pretty much ready to go. Now's the time to look for opportunities, because the same way people at the beginning of the pandemic were fearful and that caused them to check out before a bunch of people entered into the market because of greed, I'm seeing a narrow window of opportunity. So what are some of the indicators that you might potentially have a deal? Because always remember, number one, if the numbers don't work, the numbers don't work, right? And number two, also the data, do your research. Hopefully anyone listening to this should have a particular area or areas that they've narrowed down that they would like to either move to or buy an investment property in. With that being said, drive around those areas. If you're familiar with them, you should also be familiar with the properties that were being fixed. And properties that needed fixing. So what I'm saying is start looking for fixer uppers, and then be very cognizant of properties you see that are being rehabbed or being fixed up, with special attention given to those properties that, let's say 1 month you saw a lot of activity on a daily basis, and then all of a sudden it just stopped and the work isn't complete. That could be an indicator that the owner, and it could be as simple as, hey, the interest rates went up and that affected their financial situation, whether they were trying to do this with a HELOC or a very short-term loan that was sensitive to interest rates. There could be an opportunity for you to come in there and basically take over that property and finish the work yourself and be able to make either a substantial profit if you hold on to it for a while. Keep in mind, I'm not encouraging fix and flippers. I'm not encouraging anyone to go out and fix and flip unless, of course, you have a lot of experience in that arena. What I am suggesting is you may be able to find properties below market. That's right, I did say below market in this market, by targeting buyers that may have obvious signs that they're under some type of financial duress. And one of the most obvious ways is when you're driving through a neighborhood that you're very familiar with and you see things like work that had started and has stopped, or you see those big orange stickers on the properties that usually mean they've been fined or they're code violations, things like that, and now they're in a situation where they can't afford to fix them because the lending has changed. I think that would be a terrific opportunity for some of you guys to be able to go out there and get deals. And once again, guys, I mean, obviously, if you run across something like that, you're going to want to do your research and your due diligence before getting under contract to find out what exactly, if it's a property that was being fixed up or rehabbed. You want to find out, how much it would cost to finish fixing that property before signing any contract, or if you sign a contract, at least give yourself a decent inspection period for you to figure that out, as well as make sure that if there are fines, the orange stickers that you see on properties, make sure that you research and you understand what those fines are and the cost associated with that. And here's a little bit of a tip, guys. I can't speak for everywhere, but at least in my neck of the woods, which is Miami-Dade, Broward County, it seems like a lot of the times you could purchase a property and let's say, I don't know, it has $50, $60, $70,000 worth of fines. And let's say even with those fines, the numbers make sense. You could still buy the property under market. The thing is, if you actually resolve those violations, you may find that the city will then be very open to settling those fines for much less than they charged you. Now, I don't want to speak for how much less or significantly speaking, but I can tell you that I know of cases where the new owner was able to get rid of those fines for 50, 60, 70, 80, in one case that I know of, like 99% of what they paid way less. They paid like 99% less than what those fines were. Now, I'm not saying this is going to be the case in your neck of the woods or even down here. It's always going to be that case typically, but that could be a huge opportunity for people that are ready to take projects like that on. And I just thought I would share that with you guys because, like I said, there's always opportunities, always look for deals, and don't let fear and greed cause you to miss out on great opportunities. But anyway, guys, short video today. Thought I'd just share that with you, and hopefully this helps a few guys out, and some of you guys are able to take advantage and either get that home you always wanted below market or jump on that investment property and be able to turn that around into a cash flowing property. Anyway, I'm Roger, and I will talk to you guys soon.